going forward.
Well, let's bring in now Tom Lydon on that point. He is editor and publisher of ETF Trends. He's also contributed to the Schwab report that we were just talking about. Tom, obviously,
look at his smile. Look at his smile.
Nice smile there. Obviously, as we can see here, ETFs have their fair amount of controversy. Going into 2012 is going to be what kind of year in terms of ETF trends?
Well, as the report outlines, there's been huge shifts into fixed income, and that, I think, has been key and critical. Not into treasuries, which were the best performing on the fixed income side this last year. We actually saw more money going into corporates. And really, surprisingly, a huge amount of money going into sovereign debt in emerging markets as people are trying to protect from the dollar and also get greater yields. And as Herb says, absolutely, there's an increase in leverage and inverse ETFs. The bottom line is, folks, they work. They do exactly what they're supposed to do. But Herb, just a second. And for advisors that have long positions in bonds that are looking to hedge on the downside, if you're using them on a daily basis, they work.
Do I want, Tom, my advisor using leverage on ETF when we've been told that every single study says you should not use these for investing purposes? They're a trading tool, a gambling tool. I mean,
what if you have a little extra money, right?
They're not a gambling
about
tool.
Your retirement, it's a couple $1,000 extra to play with. What's wrong with that, Herb?
No, it's not gambling and it's not playing. It's hedging, and it's used on a daily basis.
And it's all one way, Tom. And that's not a hedge. It's all in one direction.
It's one aspect, Herb, of the ETF business that's going to continue to grow. Yeah. It's not going away, and people aren't shooting themselves in the foot. These are people managing billions of dollars, and it's a trend that's working.
Well, it's a trend that is working and will work until it doesn't. And, you know, I was stunned to see that, actually.
Well, I think, again, as you look at shifts, and these advisors managing billions of dollars, the whole report outlines that money's moving. And ETFs are the tool that people are using. So on the fixed income side, people are looking at dividends. They're looking for yield. They're looking at emerging markets, and that's kind of key and critical.
What about commodity ETFs? Because remember, say this time last year, early last year, there were a lot of people who said that commodity ETFs were partly to blame for artificially pumping up commodity prices. And yet we saw last year, over the course of the year, that a number of commodity ETFs experienced significant outflows. What's going to happen to commodity ETFs this year?
They did, absolutely. Well, gold actually had increases last year, but general commodities, agriculture, energy were down. But one thing that ETFs have done is created an asset class that the average advisor, the average investor, really didn't have access to in the past. And now I think it's here to stay. If we continue to see profitability in the commodity side, we're going to continue to see increases in commodity-related ETFs and on the alternative side as well. Areas like the VIX, for example, where we can hedge portfolios. So what ETFs are doing, and what the study clearly shows, is advisors are able to spread out client portfors to avoid risk and actually, hopefully, anymore.
Come on, God, well, here we go.
One other point is, as this becomes a little bit more complicated, advisors are outsourcing portfolios.
And we got to get to some of these picks that were in there, by the way, for Schwab. We promised our viewers this. We teased it. I guess we should get to the names instead of arguing about who's doing work. I'm going to do some work. Here are some of the names from Schwab, what they're recommending. Everybody get your pencils out. Vanguard Dividend Appreciation, the VIG, probably could use a better name given the gambling references. iShares Investment Grade Corporate Bond, the LQD. And the SPDR Emerging Markets Local Bond ETF, EB.
Those, Brian, are actually our picks. And if you go to etfvirtual.com, you can actually get a copy of this report. It goes into all the detail.
Okay, thank you so much for joining us, Tom Lydon.
Thanks, folks.
Very controversial block.
Yeah, but you know what he said? One quick thing, but turn the music off for 1 second. Here's the thing. Everybody. Wow, they're responsive. That's great. Good job. One thing about people say, why is the market up? Why is the market up? One thing out of this, I just got to pluck it out of here, is that more investment advisors directed people in ETFs and out of real estate, commodities, and currencies. Right. So that's probably one of the reasons we've had that Santa Claus rally, is that we're seeing a flow, and Schwab confirmed it, into more equity-based ETFs out of probably gold and real estate. It's coming in.
That's a good point to make.
Cue the music.